Hey everyone, it's Melissa with Arizona Gateway Real Estate. Welcome to July 2023's monthly real estate market report. I work the Phoenix metro area and East Valley suburbs of Gilbert, Chandler, Queen Creek, Santan Valley, Scottsdale, Tempe, and more. I'll touch on the Gilbert specific numbers a little later in the video, so please try to stay with me. We are moving into the second half of the year. While challenges remain for today's buyers and would-be sellers, there's some hope and growth in the data. So the good news is that despite many gloomy forecasts from early January and late last year, the residential real estate markets have returned towards more of a typical seasonal trend. The buyer demand has also improved. News headlines spent the better part of last year, and they are still right now calling for a housing recession and an economic downturn and for a decline in prices. And that keeps these potential buyers and sellers lingering in uncertainty, concern, and confusion. So what I can say is it's important for buyers and sellers to remember that the confidence they need to make decisions on moving comes from both learning more about the market, looking at the historical data, and then of course talking with a trusted advisor. So first, let's start with the good news. Number one, housing does seem to be normalizing after two unprecedented, what we like to call unicorn years. We are seeing that normalization show up in increased buyer demand. The buyers are out there. We are seeing normalization show up in pricing. We're also seeing a return of the normal seasonality. So normal is a good thing. One reality check to some of those good things are that supply is still constrained, and so as a result, homeowners have limited options when it's coming to trading up, trading down, and overall moving, in part because of the tight supply. And of course, those higher interest rates are still causing some of the slowdown. Not surprisingly, the number of new listings coming to the market from a lot of these homeowners who might be ready to move are still declining. As we pass this mid-year point, this is causing prices to stay up and start rising again. Combining the higher interest rates and the higher prices is causing affordability issues for a lot of potential buyers. One thing I've noted is that new construction is growing. That is offering buyers more options. We've seen buyer demand tick up after the past 6-7 months in 2022, which had gone down because of those rising mortgage rates. They were being scared off from the market, and those buyers were sitting on the fence. So recently, Freddie Mac conducted a survey of buyers and sellers, and they found 18% of Americans said they are likely to buy a home in the next 6 months. And at the same time, 16% of Americans who own their home that were surveyed said they are likely to sell in the next 6 months. These are really solid indicators of the market, that it's returning to a more normal trend, but also importantly, returning towards a more active market. Like, we want to see those homes turning over. On the demand side, it's important to note that today's buyers are coming to the market in a much stronger financial shape. So what you see here is from the New York Fed. As of the first quarter of this year, the median score of Americans taking out a mortgage was 675, which is a great credit score. And that's even a higher score than the typical American consumer. So a really very good sign for the housing market moving forward, that the new normal has stronger, really qualified buyers. We've now had 10 months of mortgage rates moving mostly in a well-confined range, somewhere between that 6 and 7%. This started back in October. As we all know, the rates went up. With the picture of demand showing rebound and improvement, let's take a quick look on the supply of existing homes. Overall, across the country and in Arizona, listings are down. A quote stood out from the president of the Federal Reserve Bank of Richmond, Tom Barkin. He captured it really well when he said, "I didn't fully anticipate how much the moving interest rates, particularly over the last 12 months, would convince people not to put their houses on the market." And I think this speaks so much to the fact that many homeowners are looking to move. They want to trade up, they want to trade down, but they're locked into that 3% mortgage rate. That mortgage surge didn't just affect buyers. It affected people who want to move because they don't want to leave that 3% rate and go to a 7% rate. All right, so if you are still with me, let's just take a quick look at Arizona specifically, in Gilbert, Arizona. The June numbers in Arizona show there were 7,665 closed transactions in the Phoenix metro area with a median price listed around 470,000. New home sales were around 1,600 with a median sales price of 519,000. Gilbert specifically had 336 listings. 316 were active, 23 are incoming soon status, means that they're coming to market. So Gilbert's still staying in a seller's market overall because of that lack of inventory. The median list price is $695,000, and that translates into about a $280 price per square foot if you're looking at the size of the home. Average days on market's down to 51, which isn't horrible. But overall, the market is still moving. It's just still a little slower as things are kind of working their ways out. If you are interested in talking about your specific situation, make sure to DM me. There's all of my contact information in the notes, and I am always here to take your call.